One of the stocks that I own in my personal dividend portfolio is Texas Instruments, stock ticker TXN, currently trading at $179.49 per share. We can see over the past year, this stock is down about 4.83%, and year to date, this is a company that is down 5.83%. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of Texas Instruments, and we're going to be looking at 4 different valuations. We'll be looking at Graham's valuation, a discounted cash flow model, a multiples valuation, and a dividend discount model, and all 4 of these valuations will roll into our output tab. So let's go ahead and jump over to our stock screener. If you'd like to be able to download the spreadsheet, you can head over to my Patreon page at the link in the description. Let's go ahead and come up here and we will plug in the stock ticker for Texas Instruments and hit enter. And you can see all of this data is going to automatically load in. Now we're currently looking at a 365-day change, so you can see the price has been a little bit volatile over the past year. Now coming over here, we can see they're paying out $4.96 per share in dividends, which gives them a dividend yield of 2.76%. Now the payout ratio is currently sitting at 47.6% as well, so that's a decent payout ratio. Analysts currently have a target price of $171 per share. That is a little bit lower than the current trading price. The beta for this company is sitting at 0.99, so technically you shouldn't see a whole lot of volatility. Let's go ahead and move into our first valuation, which will be Graham's valuation. I'm going to come up here and zoom in, and we can see the formula right here that Benjamin Graham laid out for us to calculate intrinsic value. So the first thing we need is the earnings per share, which we have listed right here. We also need our growth rate projection, and I'm using a combination of analyst expectations, my personal expectations, and just kind of economic expectations as well to come to this growth rate. And then we're plugging in the current yield on AAA corporate bonds, which is a little bit higher than it has been in recent months, which is going to lead to a lower valuation. So when we plug all of this in, you can see we come to an intrinsic value of $147.73 per share. Now moving forward, we're going to look at our discounted cash flow analysis. And in order to perform a discounted cash flow analysis, we need to project a growth rate to the future free cash flows for the company. So what I've done is I've plugged in the historical free cash flows, and we can see our year-over-year growth rates here. We come to an average growth rate of right at 10.09%. So moving forward, I'm projecting a growth rate of about 11% to the future free cash flows and to the terminal value, which is the sum of the future free cash flows past the year 2030. I then took the present value of those future free cash flows and added them together here, added Texas Instruments cash and subtracted out their total debt to get their equity value. Once I had that, I divided by the number of shares outstanding, came to a discounted cash flow price per share of $209. Now let's go ahead and move on to our next valuation, which will be the multiples valuation. The idea behind this valuation is we should be able to value a company based on how the market is valuing companies that are similar in structure. So you can see the comparable companies that we're using here. We're taking their stock price, dividing by the earnings per share to get their price to earnings multiple. We then take the average price to earnings multiple for these companies, multiply it by Texas Instruments earnings per share to come to an intrinsic value of $181 per share, which is pretty close to that current trading price. Now moving forward, we're going to be looking at the dividend discount model. And the idea behind the dividend discount model is we should be able to value a company based on how much they pay out in dividends and how much that dividend is increasing. That's where the sponsor of today's video is going to come in, and that is Wisesheets. And using the Wisesheets add-on in Google Sheets or Excel, we can automatically pull in lots of key financial data into our spreadsheets, whether in Google Sheets or Excel. I'll have a link to the free trial in the description down below, but you can see all I did was plug in Texas Instruments stock ticker and click on get data, and we have things like the income statement being pulled in, the balance sheet, the statement of cash flows, and we're also going to have some other key metrics automatically pulled into our spreadsheet. And so what we're currently looking for is going to be the dividend growth over time. So there's a few different things that I want to look for, but one of the things that I want to look for is the growing revenue. And so we can see currently they're sitting at around $18.3 billion in revenue for their most recent year. If we look at around 2013 and 2012, they were sitting at around $12 billion in revenue. So that's definitely a good sign to see the growing revenue. Something else great about Wisesheets is we can automatically pull in the historical dividend payments for this company. We come over here and use the wise price function. In quotations, we'll plug in Texas Instruments stock ticker, comma, and then type out dividend, and I'll hit enter, and we can see we're going to automatically have the historical dividend payments loaded in for Texas Instruments, which will drive our dividend discount model valuation. We can see exactly right here, I've plugged in the historical dividend payouts for Texas Instruments, and it's had a pretty good growth rate over the past few years: 16.8%, 13.3%, 12.75%, and 7.83%, which gives it an average growth rate of 12.7%. Now moving forward, I'm projecting a growth rate of 6.5%. That's pretty high when you consider it's for the lifespan of this company. I'm applying a discount rate of 9%, which gives us a dividend discount model price per share of $211 Now jumping over to our output tab, we're going to be able to see all 4 of our valuation models: grams at 147, multiples at 181, discounted cash flow at 209, and dividend discount model at $211 per share, which gives us an intrinsic value of $187. Now the current trading price for this company is around $179 per share. So let's say we want to apply a 15% margin of safety. Based upon that, the acceptable buy price for this company is $159 per share, meaning it's not quite at that buy range. So if we jump back over to Seeking Alpha, what you will notice is we've had multiple opportunities where it has been in that buy range over the past few months. It looks like during June we had that opportunity, and just about a month ago we had that opportunity as well before the most recent run up in the stock price for Texas Instruments. So like I said, I really like this company personally. It is a company that I own in my personal dividend portfolio because I think they're going to be able to continue to grow their free cash flow and grow their dividend payments over time. But you may want to keep an eye out if it does come close to that acceptable buy price. But go ahead and let me know what you think of this company in the comments down below if you plan on buying or selling this company. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.